Hello, everyone. I've been out for a bit due to some personal stuff. So now I'm right back here. If you have any questions, please feel free to ask. So I put up this new video to recap some of the USDJPY outlook and the trade that I took earlier this week. So on a daily and weekly, it's definitely still bullish. As you can see, that price is creating new higher low, high high, and higher low. A lot of people see those big move down here, indicating some pullback and target all this low for TP level. That's not the right thing to do. We are not here to predict anything. We are trading. For trading wise, we are always reacting to the price action. So, and technically speaking, when there's a move like that, we have to see where is the most recent low, which is still holding the high, right? For in this case, this will be the entire range, and you can see that price came back just right at the 50% fib, and it continued going higher. So if you go down to 4 hour, all these are liquidity, right? And right after taking out all this size sell side liquidity, price immediately broke up to the higher point and leaving a lot of imbalance behind here. So internally, this will be the low, high high, higher low, higher high again. So I find that this method is marking out all these high low, low high, or whatever you call it. It's a very good method to for you to visibly see that whether you are still going according to the trend, or another term that you guys use may be the order flow, whether it's still bearish or bullish. So as you can see that price is holding this low, um, holding this low, price is making higher high. So I'm not gonna go in every single detail over here. I'm just gonna focus the trade that I took probably on Monday or Sunday Tokyo session, the first day of the week Tokyo session. So let me pull this out. So usually what I do is to mark out the previous week or the previous Friday high and low. So let me do a replay mode here. Okay, all right. So this will be the Friday high. This is still Thursday, and this will be the Friday low. A lot of people find that trading in the early week is usually not consistent. But I would like to emphasize that recently I really find that trading in the early week is something that I'm very interested in. Um, it might be different for anyone else who is listening to this recording, but for me, why I'll explain why I feel so. So I usually mark up the 6 o'clock Eastern time, 6 o'clock p.m. Eastern time as the market open. What I would do here is to go down to 50 minute, and as you can see that if on a higher time frame we are still looking for bullish market structure, we are going to continue long until it's disproven. We are not trying to catch the top and bottom here and trying to go counter trend if possible, unless you are really going for lower time frame scalping, like 1 minute or even like 15-second, 30-second trade. But if you're not, I would suggest try not to. Um, the reason why I'm putting up this video is also reminding myself that I would try not to do it because it's not a risk management type of trade. It will hurt your mentality when it's a losing trade. And more than often, it really happens. So, going to this trade, I'll probably wait. Um, for Tokyo session, USDJPY is definitely a good pair to trade. Um, Reason why I say that is because the Japanese yen pair is always the Asian pair. For people who's trading the New York session, they can also trade the USD because it's a USD pair. So it depends on what you guys prefer. So first thing first, usually the external liquidity will be taken around 5 to 6 p.m. Sorry, 5 to 7 p.m. Eastern time. Um, it can happen on a hourly candle. It can happen on a 50-minute candle. It depends on what kind of time frame you're using. And internal, by saying this external liquidity being taken around 5 to 7 o'clock, that will mean that it forms a range of the high and low. I'll mark that out for you later. And for the internal liquidity, that means given that the external high and low is holding any internal breakout structure and taking out the first liquidity, that will be the liquidity liquidation that's happening. So usually this will happen around um, if the external liquidity liquidation happens before 7, which is like 6 o'clock during dinner time. Sometimes the internal liquidation can happen around 7 as well. So give and take a little bit. So this will be somewhere around 6 to 8 p.m. And from there, look for boss and 5 or M15 and um, use sorry, using OTE or FVG or order block or supply and demand. Right? So what I will see here is that um, I forgot to mention one thing. Trading on the first day of the week on the Tokyo session, the very good thing that I spot is that the target price, which the level that you take profit at, is the previous Friday high or previous Friday low. And we don't have to target anything higher because we don't know, we don't want to predict that. If only there's the displacement up towards the high or low, we can hold longer. But if not, we'll just play day by day, session by session. So TP level will be previous Friday high or low. So for example, in this case, the external liquidity being taken out right before the 6 o'clock. And let me play a little bit, a few more candle, so that you guys can see what happened around this period of time. So as you can see, price raided another round, which is another liquidation. Still no action yet. We're still waiting for the boss to happen. If I'm going to switch back to M15, sorry. And there you go. So as you can see that price is actually making a higher high internally. If we were to look back at H1 or H4, you can see that the price actually liquidate the low. Whoever placed the stop loss over here on the Friday, thinking to go higher, they will get stop out because all these are liquidity. So I'm gonna mark this out as the M15 boss. What I did last on that day itself was to mark out this one as the new institutional candle because price came back down to took out all this low and followed by a boss. And if you go down to M5, M2, or M1, whatever you want to, whatever you think is good, um, the price is just ranging after 10 because um, usually what I realize that um, your entry usually happens around 8:30 to 9:30 or even earlier, 8:30 to 9 p.m. Eastern time. And by 10 o'clock at night, which is the Eastern time, usually the low hanging fruit will be met. That's your first TP level. If you do not want to hold anything higher, you can take profit over there. If the risk to reward is good enough for you, that's fine. If you want to hold longer, you can target the external liquidity, which in this case is the previous Friday high. So the low hanging fruit that I mentioned was here. Reason why I say that is that if I go down to M1, this is the most recent M15 break of structure. So I like to use the method of the turtle soup. Um, a lot of people mention about this, placing the entry right at the mitigation level, which is the first step into the POI. And the easiest way to explain this is that the first tap into the POI usually will be taken out, which will be the second tap in to liquidate the first entry. People think that longing here will be the key, but more than often they will be stop out because this first entry is usually just the mitigation. So what I usually do is to place the entry right at this level and stop loss underneath the IC, or you can put until this one just to be safe. Up to you. If you are a higher risk to reward taker, you can risk here. Depends on what you want to do it. It's just different kind of method that you guys want to place. So target will be the previous Friday high. So as you can see, before 10 o'clock, the first low hanging fruit has been met, and price just range towards the London kill zone. So we're going to play this candle here. So I just want to explain a little bit more on the higher low, higher high form here, right? Um, on the H4, we know that this is a 4-hour rate followed by a break and 50 minutes break of structure. So we had a lower low, and this lower low is for those who is shorting from the top here, take profit at this level, and immediately after that, after the break of the low, it push up straight to make a higher high, and the higher low which is holding it, followed by another higher high. So for now we can confirm that this price is pulling back to the premium, or even to the external liquidity, which is a range high. So this will be the new low. I what I usually do is that when I get filled, when my execution entry has happened, um, when it has made a new high or new low, I will move the stop loss to the new high or new low, which is the opposite one, because um, technically this new low should hold. Um, if it's broken, that means the whole trade is disproven, and all these are actually liquidity. So let me continue to play out some candle over here. You can see that this low is still holding, and internally within this range, we had another internal boss on the M5, which is good news because we know that price would likely going back to bullish instead of the. It just means that this pullback to the discount has most likely complete, and price is going to be ready for a continuation long again. So until this high is being taken out, I will not change my stop loss to here, just in case that price is coming back down to liquidate this low again. So let me continue to play more candles. So now it's becoming more interesting because price is coming to the London Q zone, and there you go. So yeah, it's pretty straightforward. We don't have to target anything higher because we know that price is still bullish. You want to hold longer, that's up to you. But for me, a 7R, even though it's 3R, for me it's good enough for a trade, because if I am I if I were to risk half of 100,000 profit from account, That's $500 risk, and 3 hour will give me about $1,500, and that's good enough for a trade. Um, it's okay for me to actually leave the entire week out, by just having this one win, 1 out, one win. That's good enough. A lot of people will be shaken out within this range. This is a crazy range. Sometimes we see it, sometimes we don't. So if it happens, it happens. But yeah, I think that's about it. That's what I want to put it out here. Um, Usually, this entry will be happening around T level. The first TP will be the low hanging fruit, which is that small little internal structure range. TP2 is the previous Friday high or low, and that's the overall draw of liquidity that we want to target. And if it gives you a couple of R, that's good enough. And this usually happens within like 2 to 3 hours. All right, I think that's all I have for you guys this week. I will try to put up more videos. If you guys have any questions to ask, please feel free to ask. Don't be shy. Give me a like. Give me a subscribe to my channel. If there's any specific content that you are interested to know, I'm more than willing to help. Thank you.